Well, analysts at the FSDH Merchant Bank have predicted that the June inflation rate in Nigeria will drop to 15.64% from 16.25% recorded earlier in May. The near 1% drop was lower than to 17.24% recorded in April. The decline will be the fourth consecutive decline in inflation rate in the country since January. Now, the government has continued to pump money into the economy. And according to FSDH, the general price movement in the consumer goods and services in June will increase the composite consumer price index to 233.25 points. That's representing a month-on-month increase of 1.18%. The researchers said the increase in the price of food items moderated in June compared with May. Well, that report sets the tune for our discussion today on Business Nigeria, and joining me to do that in the studio is a research analyst with Afrinvest, Doyinsola Afolabi. Many thanks for your time, Doyin. Good to have you. All right, also joining me via Skype. All right, I'm told Ayo Akinomi with FSDH Merchant Bank will be joining us soon on that, but we'll begin with Doyin. Yes, Doyin. FSDH came out with this research, and it's predicting that, of course, there's going to be another increase, a further decline of the inflation to about 15.64%. That's the June statistics when it comes out. Now, do you share in that? And, of course, they've pegged it on the intervention by the CBN and the introduction of or the production of farm produce. Do you share that prediction?
Fortunately, at Afrinvest, we don't.
Okay.
If you look at inflation, yes, it's been moderating since February, but that's largely tied to the IBase effect for 2016. And the IBase effect, that IBase effect is starting to thin out, right? If you look at month-to-month inflation, you would see that we've actually recorded an increase in month-to-month inflation. It's been increasing from 1.5% in February. It's currently at 1.9%, right? And this is largely tied to the volatility, the farm produce, right, which cannot be controlled. It's the increase that we've seen in farm produce, food prices, is largely tied to the seasonality effect. That's one way to look at it. Historically, you've seen seasonal Nigerian planting season from about, I think it will be from March thereabout to July, to last till July. But then you don't start to harvest until somewhere around September, right? So that has affected. Yeah, that's one way to look at it. Another way to look at it is the recent incidences that we've seen, flooding that we've seen, could also affect, these planting areas, which could obviously affect the food price trend. So, like you have cases of erosion, right, flooding the farmlands, and all of that would significantly affect food prices. You have and then if we're talking about fixing the solutions for now. Okay,
just right, before you let that out, fixing the solutions, of course, with what you have said, apparently that's what we are still having the increase in the month on month, and of course this may be the year on year that we have the decline. But how soon? Of course, you're talking about the solutions now. We'll still see the prices of food in the markets, on the streets, skyrocketing. But how soon do we get the effect or the impact of this year on year on the food prices?
Okay, the truth is, for food prices, for farm produce, like I said earlier, it cannot be controlled.
Because
right?
It's seasonal.
Yes, because it's seasonal, right? And then the flooding I talked about. But I would say there are not short-term solutions for now. But in the long term, like if you talk about fixing the infrastructure, so you talk about farmers being able to get their goods, get their farm produce out to market. Because like for a farmer, right, I'm concerned about, okay, I've gotten my output, like I've gotten 1,000 or 100,000 tons of tomatoes, right? But then getting because they are perishable, getting my tomatoes to the market, I may just get about 500.
Okay,
you're right.
FSDH says that of course, we've seen, before we go to FSDH now, we've seen that it's been a four-time consecutive decline in the inflation rate. And of course, that's why the part of why the prediction is based that there is also going to be a decline for the June rate. All right. You are saying you do not believe in that. All right, let's ask Ayo Afolabi, who joins us on phone now. Ayo Akinwumi, who joins us on phone now to talk about to tell us how it was computed, this research, and how they got this prediction. All right, hello, Ayo Akinwumi.
Hello, good afternoon. Thank you for having me.
Good afternoon. Yes, your research result points to a possible decline in Nigeria's inflation to about 15.64% from 16.25%. You may want to tell us now how you computed this data.
Thank you very much. The inflation number that is published in Nigeria today is based on year-on-year inflation number, and meaning that the consumer price index for the month for the current month versus the consumer price index for the preceding period of last month. And therefore, what we release is that inflation number is going to drop further to 15.64 in the month of June from 16.25 that was released in the month of May. And principally coming on an account of base effect, meaning that the rate at which the consumer price index increased in the months between May and June in 2016 is higher than the rate at which it increased in the months between May and June in 2017. Again, if you look at the rate of increase in the consumer price index, that we expect that will happen now between May and June, between April and June this year, between April and May this year, increase faster than we expect to increase faster than the rate at which we think inflation rate will go up between May and June this year. You recall that around about 2 months ago we had escalated increase in the price of tomato. That has since reduced a little bit. Yam also same, and other food items. So we think that inflation rate is going to drop a little bit further in the month of June when it is released.
Yes, it seems the CBN is also optimistic about this year prediction, and the CBN governor already is boasting of homegrown solutions and, of course, its intervention in the foreign exchange there. But let's look at it. It's going to decline to about 15%. Is that something to celebrate?
Well, yeah, if you look at it in relative terms from where it is coming from last year, over 18%, and then it's moved by over 300 basis points now to about 16%. Yes, you say it's something to celebrate about, but then if you look at it again in relation to the fact that the target of the central bank, which is 6 to 9%, is it something to celebrate? The answer is no. But then there has been a consistent decrease from the beginning of this year. So we expect that, yes, it is something to celebrate. The major reason why the inflation rate went up last year, two things: the structural rigidity in the country, it seems to be being addressed. Number two, the FX issues we have last year on account of the devaluation of the currency. We had currency that the exchange rate as high as over 500 naira to a dollar last in the parallel market. That has since dropped consistently, and then there seems to be convergence between the official rate and the parallel market rate now, and the market is more supplied. So we think that if you look at this number, we think that the drivers of inflation number seems to be improving, and therefore we think we can celebrate on account of that. But this year, will it get to the target of the central bank? The answer is no. And therefore, on that angle, there is still more work to be done by the central bank and other authority, the government policies to ensure that inflation rates come down to single digit.
Yes, let me talk to Doyinsola in the studio. Yes, Doyin, of course, we've seen the trend for 3 consecutive time now. We've seen the decline in inflation. And with this prediction, although you do not back this prediction from FSDH, but perhaps we see that decline, we see that prediction coming true. The CBN says it's confident that the country will return to a single-digit inflation rate. Do you think so?
First of all, I'll say that like I said earlier, the major issue we're still having is the food prices, which cannot be controlled by the CBN. Right? Yes, they're happy with core inflation that has been moderating and is currently at about 13%. Right? They are very okay with that. But I think the CBN is more focused on a couple of other macroeconomic, you know, stability that we've seen. You still have the interbank, and you still have they're still focusing on the big guy, which is FX, right? You still have a disparity between the interbanks and the NAFEX, right? You still have we've seen some sort of stability in oil prices, and you know that the government revenue is tied to oil prices, and you know there's a bit of volatility. They're still really concerned about that, and also convergence of the rates, the multiple windows that we have, and the FX market. And so what I'm saying is they are still focused on, they don't have anything to do. They cannot really control the food prices, which is causing the month-to-month inflation.
Okay, right. I don't know, Ayo, if you heard Doyinsola. She said the CBN cannot control the prices of food in the market for us to see that decline that we would want in the inflation rate. Are you in support of that? Especially, let's look at the foreign exchange market now. Over the weekend, we saw that the value of the naira was a bit low, although it strengthened after the CBN intervened again over the weekend. But I know at a point when the CBN did not intervene, they left the naira to see if it was independent of that intervention, but we could not see it. Now, with this, do you think, are you in support of what Doyinsola has said?
Okay, so Central Bank cannot control food price. That's correct. However, there are inputs that drive those numbers, which is under the control of the central bank. Maintenance of price stability, local price, and foreign price, that's exchange rate, currency price, and commodity prices, is under the purview of the central bank. Now, what drives our exchange rate in Nigeria? Because we are more like a mono product in terms of what brings in our foreign exchange is oil. And is it under the control of central bank? The answer is no. But central bank can create monetary policies to ensure that there is confidence in the local financial market, which they have been trying to do with what we have with the current interest rate strategy, keeping interest rates high. So do two things. Number one, to encourage inflow of foreign portfolio investment in local fixed income securities, which increases the supply of foreign exchange in the Nigerian market, which has been successful. And we've seen data to back that up. Number two, to ensure that the rate at which capital is moved out of Nigeria and to take advantage of high interest rates abroad is reduced. And therefore, both from the supply side and the demand side, they are trying to manage that. However, the sustainability of that depends on what happens to oil price and oil production. Oil production is improving. Last week we heard that, which is now being confirmed with that maybe around 2 million barrels per day now. If that's correct, that's a lot of improvement from 1.4 million barrels we had sometimes last year. Number two is the fact that oil price stabilizing around $50 per barrel is good for us, and it will increase the supply of foreign exchange. When this one happens, it will reduce the pass-through impact of the pass-through impact of local prices on inflation, which will make inflation rate to moderate. And again, it means that production costs for manufacturing companies will reduce, and therefore they won't be able to shift it to us. And therefore, it will filter on inflation rate that we are.
All right, Ayo, I would like you to hold your thoughts. We have to take a break. Yes, the CBN may not be able to control all, but it can control some. And one of that is the ban of some items in the market. Is it paying off? Well, that will be after the break. Just stay with us. Glad to have you back here watching Business Nigeria. Of course, we're talking about the FSDH Merchant Bank prediction that the June inflation rate in Nigeria will drop to 15.64% from 16.25% recorded earlier in May. Of course, the decline will be the fourth consecutive decline in inflation rate in the country since January. That's if that prediction comes true. I've been speaking with, of course, the head of research at the FSDH Merchant Bank, Ayo Akinwumi, and Doyinsola Afolabi here in the studio with me. Doyinsola is a research analyst with AfriInvest. Yes, just before we went on that break, you said that the CBN, of course, may not be able to control some things, but of course it still has some things under its purview. Like Ayo said, it can actually create some monetary policies that will enable some actions to take place. And of course, one of such is the ban of some items in the system to enable the local producers able to produce these items, for example, the toothpick. Now, do you think it is paying off? Let me start with Doyinsola in the studio.
Yes, thank you. So first, yes, the CBN can control some effects related. So some foods that we usually would import, and then they put a ban. Yes, the CBN can do that, but for example, I would like to think that there are some food items that have been banned that most producers will still have to source for FX at the back market, at the parallel market, right? Which was even much more higher than getting from the CBN themselves. They will also factor these prices in. So some way, somehow, we have the farm produce and we have imported food items. We have food from local items, and then we have the imported food items. And I remember that for March or April thereabout, we started seeing a moderation in imported food items because of the improvement that we saw at the FX market. But I'm still saying that for local food items, it cannot be controlled. And what we've seen is the surge that we've seen is as a result of the food prices, the local food prices, the increases that we've seen in the local food prices. So yes, for imported food items, yes, it can be controlled because of the improvement that we've seen in the FX market. But for local, it's not just even the recent law.
Let me talk to Ayo. Ayo, do you share in what Doyinsola has said there? Yes, the CBN banned some items, and of course it's to enable the local producers manufacture this item. But she says the CBN may not be able to control some of this, even if we give the local producers the opportunity.
Yes, I agree with what she said, even though I didn't quite get her very well because of the transmission. However, what I mentioned is the fact that, yes, Central Bank does not control food prices. However, they have components to do that. However, if we look at what is going on now, we are moving into harvest season, whereby farmers will be harvesting food items, products, and therefore it may likely have also moderating impact on the food prices. Yes, we still have a lot of infrastructure challenges, which I alluded to earlier, with the transportation, even the fact that most of our yam now, the Minister for Agriculture mentioned about the fact that they are now exporting our yam outside this country. It should be an incentive for farmers to increase production of yam. However, it is placing upward pressure on the price of yam in the short term. And until there is going to be an increase in the production, the price will be going up. But then if you look at what is going on, and that was what I took time to explain how the inflation number is computed. If you look at last year, June last year was when they adopted flexible exchange rate. We saw and so if you look at the numbers that were published for CPI last year, the inflation number, the CPI number rose up sharply. The same thing with May, when there was an increase in the price of premium motor spirit, PMS, which we call petroleum here, petrol. It went so, and those two numbers, variables, impact the current numbers we're going to see as inflation rates that we are going to see this year. But going forward, we think it's going to moderate down marginally, but not onto single digit this year. We don't see inflation rates in single digit this year.
All right, the improvement from negative 1.7% in the Q4 2016 to negative 0.5% in Q1 2017, well, makes the target of the CBN achievable. And of course, if this decline comes through and we keep seeing a further decline throughout the year, we may well be out of recession anytime soon. Well, we'll keep tab on the activities and see how it goes from there. Doyinsola, I must thank you so much for your time. And of course, Ayo Akiomi, the head of research at the FSDH Merchant Bank, thank you for your time on Business Nigeria.
Thank you for having me.